He announced 2 days ago that he's ordered Fannie Mae and Freddie Mac to treat cryptocurrency as an asset to be considered when someone applies for a mortgage. That's a big announcement because I know historically, not only did most lenders not count Bitcoin or any kind of cryptocurrency as an asset, it could even be a negative for I have several friends who, once a bank learned they owned Bitcoin, they got put in the naughty, risky folder. And it didn't even matter that they had ample assets, traditional assets like stocks, to cover the loan. They were discounted because they owned Bitcoin. So it's obviously a major announcement, major progress to flip that on its head. So overall, I think it's very good news. There are some cautions with it, though, in that it also came with the caveat that the cryptocurrency has to be with a regulated exchange. So that creates a disincentive to self-custody. So if it turns out that people who are already self-custodying decide then to store their Bitcoin with Coinbase in order to take advantage of this, that is a net, or I don't know if it's a net negative. It is a drawback to this. And if there's people who are currently using a custodian, but would have otherwise self-custodied, but then no longer decide to because of this, that would also be a negative. Similar to like with ETFs. I mean, overall, I think it's a net positive for the space, especially when it creates opportunities for new people to enter Bitcoin and who otherwise would not have. But when you have people who previously self-custodied sell their Bitcoin to buy BlackRock ETF, that act I think is actually, quite bad for Bitcoin. So then that created a conversation on social media about why, and we chatted privately as well about why self-custody was not included. A traditional Bitcoiner would put on their conspiracy hat and think that it's the government intentionally trying to get everyone to custody. Maybe, but we also came up with like legitimate reasons as well. And DK, you brought up reasons. Seasoning funds is one of them, and I'd never heard of that term before. But
Me neither.
So thanks for educating us. But I knew I knew the concept. I just didn't know that was the term. But basically, it's very common for a lender, if they're going to look at assets you have like stocks, to judge your merit for a loan or the rate you're going to get or the terms or whatever, that stock that's held at that lender or their financial institution, it needs to have been held for like 60 days or 90 days or maybe 6 months or some period of time there, so that you're not like quickly moving them in and out between financial institutions and taking out more loans than in aggregate than any one institution is aware of. So with self-custody, if it was, how would you demonstrate you own the Bitcoin? And what prevents you from, I think a scenario you brought up, David, was, like a group of friends could get together, pool their funds, make it look like any one of them has a lot more money than they have. And then we could just like go around the group and all of us look like we have 5 times more money than we actually have. But there are solutions to these problems. So, for one, you can prove your ownership of Bitcoin even if it's in self-custody. And 2, Bitcoin, the protocol has time locks built into it. So you can lock up your funds for any period of time. So if Fannie Mae has a 90-day requirement, okay, there can be a solution. And there are solutions that exist where you can lock up your Bitcoin. Solutions meaning the protocol supports it, but there's also wallets that support locking up your Bitcoin for 90 days. And then you can prove that to the lender, and then they can be confident that you're not, sharing it with friends, at least within that 90-day window, whatever the requirement is. So I think what I was left with is like, we need to understand what the requirements are. And no one, even like Alex from River, didn't even know what the requirements are. He doesn't even know if he's going to be able to participate in this, even though he has a regulated business. But, there's different regulators and different licenses. And is he the right one? He doesn't know. Then there's providers like Unchained Capital. Are they part of this? Or so it would be good to understand what the requirements are, both for businesses, but also just for self-custody and open source processes.
Yeah, but my guess, so thanks for the overview. And I mean, there's so many details to this. I've been researching it a lot, and kind of learning new things and kind of making new estimates about it. But I think one of the things is, and I'm certainly, very willing to distrust any move by the government and willing to wear a tinfoil hat and stuff. But I don't think that this is as much of a like conspiracy by the government to get, your Bitcoin into a third party exchange or something. I think it's more just like, it's the easiest way to parallel the existing system and have like information sharing networks where there's like US regulated entity that has to participate in the information sharing so that you can watch how money moves around and try to understand what risk there actually is. The 90 days seasoning of funds is one thing, but oftentimes there's also a question of like, where did these funds come from? And you have to like attest to the source of funds. And if every 90 days you moved that around, you could still play that little collusion game. If you're not buying new homes every 90 days, I could gather up a bunch of funds, hold them for 90 days, time lock it if need be. And then once I'm approved for a mortgage, I could push the funds over to the other friend in the ring. And we could still create a ring of fraud that way, which we don't want to do. And we would hope that there's a solution where you could prevent that in a similar way to preventing preventing fraud or limiting fraud in the reducing risk in the current system. So I think time locks are potentially interesting, but that's a little bit closer to collateralizing. And I think the point here is that this is explicitly not collateral for a mortgage. This is asset determination, which helps the lender understand if you're likely to be a good risk and if you have funds available to, reserve funds available to pay down your mortgage in case you lost your job or whatever. So it's like a very kind of, in a sense, it applies to a lot of people, but it wouldn't surprise me if there's like a very narrow set of people who actually get value from, like, they have an FHA or need an FHA loan and they need to demonstrate additional reserves beyond what their income shows. Like it may be a bit of a niche, I don't know. But I think it does drive the narrative forward that like Bitcoin is relevant as an asset to consider for any kind of loan, mortgages, but also any other kind of loan. It starts to kind of give it some more credibility. So I do think like the more that this narrative emerges, the better it is for Bitcoin in all kinds of contexts. Even if this one, I don't know how much it's used.
Yeah, I agree too. Is the argument then, just to be clear, because I didn't realize that, I thought you could use it as collateral. Like, so that actually seems a lot less powerful. If you can't use it as collateral, is the benefit besides maybe getting approved when you wouldn't have gotten approved that you might get a better interest rate?
Yeah, I think you could get approval where you wouldn't have gotten approved. You get a better interest rate, but basically you're showing the lender like, hey, I have such and such, like say W-2 income that should qualify me for a certain value of a home. And they say, well, do you have 12 months of reserve in case you lose your job?
Yeah.
And still pay your mortgage. And so you can show that reserve in US dollars and stocks, or now you could show it in Bitcoin. As long as it's held in,
or fart coin.
Or fart coin, maybe, yeah.
He said cryptocurrency.
Yeah.
Yeah.
Not Bitcoin. Someone at the event last night said that, jokingly, that they are going to create a new coin and then sell one of those tokens to their friend for $1, and all of a sudden they're worth $10 million, and then use that for their Fannie Mae loan. So I think there has to be some kind of liquidity requirement, among other things.
Among other things, yeah.
Ultimately, just Bitcoin. But
yeah, exactly.